This is an Uncovered Japan Company research report on Mitsui Kinzoku, ticker 5706. It is a 150-year-old metals company that has become the leading supplier of ultra-thin copper foil used in advanced AI chip packages. The investment case begins with an unusual mix: a technical materials franchise linked to AI spending, supported by a cash-generative metals business. But the market already recognizes much of that quality. At 28.5 times forward earnings and 5.18 times book, valuation is the central debate. Mitsui Kinzoku's key product is MicroThin, a carrier-attached electrolytic copper foil as thin as 5 micrometers. It is laminated into the package substrates under advanced chips, where increasingly fine wiring matters. The report estimates a 60 to 70% global share, giving the company a narrow but important position in the AI supply chain. The financial record shows a real operating re-rate. Revenue grew at a modest 4.6% annual rate across 5 years, but operating profit compounded at 20.6% as the mix improved. That distinction matters. The current story is not simply higher metal prices, but a larger contribution from functional materials. The group combines very different businesses. Functional materials earns the strongest margins and houses the semiconductor-related franchise. Metals remains a large share of sales, but is more cyclical and price-taking. The combination gives Mitsui Kinzoku both a growth engine and a source of cash through industry cycles. The moat rests on difficult manufacturing, customer qualification, and the cost of failure in advanced packaging. That is stronger than a generic commodity advantage, but it is also concentrated. Much of the premium case depends on MicroThin retaining its technical lead, while demand for advanced packaging continues to expand. Balance sheet quality has improved alongside earnings. The equity ratio reached 59.1% and return on equity 24.5% in fiscal 2026. The report also notes lower net debt and record cash flow, leaving management with more capacity to invest in materials growth while navigating the cyclicality of the metals operations. Capital returns are becoming more explicit, including a progressive dividend policy and a 3.5% DOE floor. Still, this is not primarily an income stock. The yield is only 0.75% because management is directing significant cash toward capex, debt reduction, and expansion of the functional materials opportunity. Management's strategy is to concentrate on functional materials while retaining the cash-generative metals base. The report sees AI packaging as the near-term growth driver, with additional options in areas such as all-solid-state batteries. The opportunity is credible, but the newer bets still need commercial proof, rather than just strategic logic. The valuation chart explains why execution matters so much. The forward earnings multiple is 28.5 times, well above the 5-year average of 15.6 times. Investors are valuing Mitsui Kinzoku more like an AI materials company than a cyclical smelter, which is defensible only if the growth and margins continue to deliver. Uncovered Japan scenario work frames a wide range, roughly 25% downside in the bear case, against about 39% upside in the base case, and 88% in the bull case. The key risks are softer AI-related demand, commodity and inventory swings, geopolitical exposure, and a valuation that already assumes a great deal goes right. Mitsui Kinzoku combines a genuine technical moat in MicroThin with a stronger balance sheet and a strategically useful metals cash engine. It is a high-quality Japanese materials story, but one where price, demand durability, and execution deserve close attention. This is research, not investment advice. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.